This is July 10th edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we're glad you're here. The beans markets, Federal Reserve, uncertainty on the Farm Bill. The beans markets has fallen apart from yesterday about the weather premium for right now in the Midwest and trade for our customers with China since December. Federal Reserve is going to be cutting the inflation rate for today and CPI. It's going to be cutting down to a year ago today. Job number is still down, but the inflation rate is a little bit of the edge from the Federal Reserve with Jerome Powell. The World Agricultural Supply and Demand Estimate report is coming for this Friday morning at 11. The ending stock is 211 bushel per acre for the old crop in the World Agricultural Supply and Demand Estimated report. We were coming back with Chris Torres from Farm Progress in Pennsylvania, and we were talking about the commodities markets with John Heinberg from Total Farm Marketing for the show. Stay tuned on Back Roads of Illinois, please. Today, we were joining with Chris Torres from Farm Progress in Pennsylvania and Rural American part of Farm Progress magazine. Welcome to the show. How are you, Chris?
I'm doing well, Cesar. How are you today? Sure.
Could you tell our listeners about Pennsylvania agricultural and mid-Atlantic coast?
Sure. Well, for people who are not familiar with Pennsylvania agriculture in the mid-Atlantic, if I can describe it, it's very diverse. Here in Pennsylvania, we have about 50,000 farms and about 7 million acres of farmland. Corn is the biggest crop grown with about 1.1 million acres, followed by soybeans with about 610,000 acres. Pennsylvania is historically a very big dairy state with a large number of egg layer and broiler operations. It's also the biggest mushroom growing state in the country. The mushroom industry is valued at around $600 million a year. Another big state here in my region is New York State. It's just behind Pennsylvania in number of farms and farmland acres. New York has 30,650 farms and around 6.5 million acres. So farms actually average out a little bit bigger there. Dairy is very big in New York. It's the fourth or fifth largest dairy state in the country. It's the second largest producer of apples in the country, though it's way behind Washington State. In terms of this year's crops, it started out very promising. There was plenty of spring moisture, but it's gotten really dry. We're in a very important time right now for corn as the plants are starting to tassel. Rain is really needed. It's been really hot as of late as well. I drove around yesterday around a good swath of the state, and I saw a lot of corn that's looking drought stressed, soybeans as well. Winter wheat has just gotten harvested around most of the region. Maryland, which is just south of Pennsylvania, is a fairly significant winter wheat growing area. The harvest is averaging anywhere from 70 to 100 bushels an acre. Right now, a big concern is local grain basis, which is the difference between the local wheat cash price and the futures price. The spread has actually been negative for wheat because of oversupply last year, and a lot of the mills are struggling to use their product. If that continues, you may see local wheat acres tumble this fall when it's planted. Actually, the June crop report that just came out showed double-digit decreases in winter wheat acres for this season. So obviously, weather could have played a factor in that, and also economic factors having to do with this negative basis. It's going to be interesting to see how many double crop soybeans, these are soybeans that are planted after wheat, go into the ground this year. Of course, that's an investment for growers to place soybeans in the ground after wheat, and I wonder if some will actually skip some of those soybean acres, maybe go with something else, or maybe just leave it fallow, just because of the weather, and perhaps even to save a little bit of money.
How about the wheat and hay production in southern part of the state and Maryland?
Yeah, I mean it's interesting because like I said, in Maryland, the wheat acres are fairly significant, and I went on a tour of wheat. I went on a tour of wheat in June and got to look at some of that crop across that state and even into Delaware. And like I said, it looked very, very good. Disease pressures were, there was a little bit more disease pressure this year, not as significant as in past years. Last year, there actually was little disease pressure. So this year's disease pressure was a little more significant. You get the sentiment from a lot of growers who grow wheat in the area that the economy for wheat is really, really stressed. It's really, like I said, it's what happened last year was a lot of the mills, from what I understand, anticipated a crop that wasn't going to be as good because of late issues having to do with with rain and all that sort of thing that could have affected that crop sprouting. But what ended up happening was that the crop was actually a lot larger than what they anticipated. So you have a lot of wheat that's in bins right now that has not been moving, and now you have a lot of new crop that's coming off that who knows where that's going to go. So that has resulted, like I said, in a basis for local wheat that's probably the worst that a lot of farmers have ever seen. In terms of hay, I was just talking to a grower last night, and in terms of hay, a lot of first cutting has come off. But again, and it looks good. But again, with this dry and hot weather, that's really going to determine how many more cuttings we're going to get for this season. There's a lot of significant hay acres here in the region. Well over 1 million acres of hay in Pennsylvania. Maryland has significant acres of hay. So, it really depends on what Mother Nature has up her sleeve.
Wow, that is pretty. Pennsylvania has corn and beans is growing. Could you tell our listeners in the Midwest?
Yes, like I said, in terms of corn and soybeans here, and I can tell you, I have the latest numbers. If you could just bear with me here just for a second, I just got the latest numbers from the USDA, which are fairly accurate. Let's see here. I believe it's a little over 1 million acres of corn here in Pennsylvania, and around 600,000 acres of soybeans. That acreage is actually up a little bit in both crops. In terms of the condition of the crops right now, like I said, I mean, it's there's definitely a lot of drought stress out there. I think overall, I think the crops are hanging in there, but this is a very critical time. You have a lot of corn that's now tasseling, and if there's going to be damage to yield, it's going to happen now, because this is such an important time. The corn is going to start reproducing, and if a lot of too much heat and not enough rain can really do some damage to those tassels and the silk. So we really are in desperate need of some rain out here. I know there's a tropical storm or remnants of a hurricane, and I just looked outside and I haven't seen anything, but hopefully we start turning on some of the we start turning that on and we start seeing some rain because we desperately need it.
There is an irrigation system or dry land.
There is some of that. There definitely is irrigation out here. Not as significant as what you would see, say out in Nebraska or some of those other states. But you definitely do see some irrigation. More towards Delmarva, which is Delaware, Maryland, Virginia area, which is just south of where I live. You see quite a bit of irrigation down there because of the sandy soils. There's a lot of sandy soils down there. So you tend to see irrigation for the simple fact that the water holding capacity of those sandy soils isn't as good as say some of the more some of the soils that are say in the Lancaster County, Pennsylvania area, where the water holding capacity is much better. So yes, I mean you do see some irrigated acres, especially down in that area, and some irrigated acres in Pennsylvania, depending on where you're at.
Chris, what is the main crop in Pennsylvania and Mid-Atlantic?
Well, the main crop here is by numbers in terms of the acres. I guess I would say in Pennsylvania it's corn. There's over 1 million acres of corn grown in Pennsylvania. Um, you know, in terms of some of these other states, Maryland has significant acres of corn, but also significant acres of soybeans and wheat, and also some hay. New York State, which is just north of here, has significant acres of corn as well. Lesser acres of soybeans. There's a lot of hay ground that's grown in New York because that goes to feed livestock. There's also a very big, hay. Speaking of hay, I mean, there's a very large market for from specialty hays to feed, the horse market because there's a very big horse market out here. So you see a lot of producers actually growing a lot of hay for the horse market. Um, you know, Other crops have significant acres too. You see a lot of fruits and vegetables out here. New Jersey is known for its blueberries, for example. Massachusetts known for its cranberries. Pennsylvania and New York have significant apple and peach acres. So there's quite a bit of diversity out here. I think Pennsylvania is top five in apples. New York is number two in terms of apples, and there's some significant peach acres up there too. So it's a very diverse area.
How about cotton in Virginia?
Well, Virginia, yes. I believe I don't really cover Virginia that much, Cesar. I know that in Virginia, it's actually more peanuts that are down there. There's quite a few peanut acres that are down there, as I understand. But in terms of cotton, if there's any cotton, I don't believe it's. I don't know if it's very significant, but peanut acres, they actually have more peanut acres down there in Virginia. Virginia is not really a state that I cover that much. Most of my coverage area is Maryland and north.
Is there anything would you like to go to be telling our listeners about Mid-Atlantic agricultural?
Well, I like to always say that the Midwest definitely they definitely produce a lot more field crops in terms of corn and soybeans than here in the Mid-Atlantic and Northeast, but we definitely are way ahead of our Midwest friends in terms of conservation. A lot of that has to do with regulations and being so close to people. Producers have to think a lot more about conservation practices to preserve water and preserve the air and all that sort of thing. You see a lot of crop rotations here. Yes, there are corn on corn acres on some farms, but not to the extent that you see in other areas of the country, simply because a lot of our field crops go to livestock, especially dairy. You see a lot of small grains being grown here. A lot of cover crops grown and possibly harvested in spring to feed animals. So it's a pretty interesting place. You know, that there's a lot of uniqueness out here, and farms are definitely not as large as you see in other areas of the country. But I'm very impressed with what farmers out here are able to do with the limited acres and the limited plots of land that they have. You know, they're pretty good producers.
There is a lot of regenerative agricultural in mid-Atlantic.
Absolutely, absolutely. There's a lot of that sort of thing going on out here. You see a lot of that in terms of, like I said, cover cropping and no-till acres and all that. And I would like to say that a lot of the regenerative agriculture that's now taking hold in the Midwest, like I said, I'd like to think that a lot of that really started here. And a big reason is because we have concerns over local waterways, the Chesapeake Bay watershed for one example. You have a lot of government regulations that have really have essentially encouraged farmers to really put in conservation practices. And I think at the end of the day, I think a lot of these practices have been embraced, not because farmers are forced to put them in, but because it makes sense to the bottom line. A lot of farmers do no-till and cover cropping because it makes sense economically for them. And it's yeah, I mean, you see all over the place. You see a lot of in the wintertime here. There's very little in the wintertime. There are very few acres that are not covered by something. You see most acres are covered by something that's green, whether that's a winter wheat that's popping through or a cover crop that's popping through. And you also have governments here like Maryland, for example, that actually pays farmers to place cover crops in the ground. So that has something to do with it too. But yeah, in terms of regenerative agriculture and those practices that are put under that banner, yes, there's a lot of that going on out here.
This is Chris Torres from Farm Progress in Pennsylvania, on back roads of Illinois. How are you, John?
Doing well, thank you. Appreciate the opportunity to be here, and I'm glad to help you out, and hope to get some knowledge out there for people on these markets.
Let's start with our conversation about the World Agricultural Supply and Demand Estimate report on this Friday morning.
Sure, sounds like a great starting point. Obviously, USDA coming out with those big numbers on Friday. A lot of it's just going to be trying to see where things fall into place after that acres numbers and grain stock numbers we got on the 28th of June.
Could you take a deep dive into the report for our audience?
Sure. Again, obviously we had the very negative, especially for corn, grain stocks and supply numbers, or acre numbers on that June report. This report here will be our first chance to see how things kind of fall into the balance sheet, and see where those numbers kind of come together. Obviously, by adding those extra corn acres in, that's going to bring extra supply into the front end of that market, plus just that extra grain stocks. I think that was the most disappointing part of that June 28th report, was just the supply of corn that was still available out there. So that's going to get put into this balance sheet, and we'll see how the USDA handles some parts of that. But realistically, it's all about carry out and where we're going to be with those new numbers in. We expect to see that new crop corn carryover get close to that 2.3 billion bushel area. At least that's what analyst projections are. 2.272 billion is where we're at. That's a pretty heavy supply of corn. That's some of the reason we've seen the market act the way it has since that report, is just the fact that corn supplies are going to be strong. Now, what can the USDA do with that report in terms of how we can manage some of those numbers, maybe keep that carry out down? One of the biggest areas obviously would be a yield adjustment because of some of the weather, but right now I don't think that's in the cards. Typically, the USDA does not make adjustments in terms of yield until we get into the September numbers now. So again, some of it's going to be understanding their process. So obviously the other side of it, in terms of acres, there's a lot of talk because of some of the damaged acres out there. When do those get moved around? That's typically not going to happen until we get into the September plantings report, and we see where we are in terms of harvested acres or unharvested acres, prevent plant, things like that come out to play. So the only real area where the USDA can make some moves is the demand side of the table. In other words, keeping that carryover down. They'll probably make some just systematic moves. In other words, we add X onto the supply side, we take Y off on the demand side to kind of keep things in check. The only concern is the demand right now has been slowing down a little bit on the corn front. The heavy competition from the South American countries has kind of limited our corn export program a little bit the last few weeks, and those numbers may be met by the market as just not a common or comfortable number or too high. So it's going to be interesting to see how this pieces together. Don't expect any big changes in terms of where the crop is and the acres and the yield side of it, at least until later on in the summer. So it's really going to come down to the demand side of the table and how things get moved around. Jumping gears over to soybeans. Now they're expectedly, we did have a little bit higher grain stock number, but demand's been pretty good the last few weeks here in terms of some late bean sales, and the USDA could very well make a little bit of adjustment there. The crush number, even though it's softened a little bit, could be helpful there. Expectations are for carryout to come down to 445 million bushels for new crop beans. So we may have a lot of that negativeness priced in, but the problem is those demand numbers that they have out there don't quite look realistic at this time frame, especially given where we are with the 2023-24 marketing year. And I actually think the USDA has done the producer a little bit of a favor by keeping so much demand into a market that right now obviously demand is lacking. And the reason I can say that, you just go look at the export sales. Yeah, China stepped in, bought a couple cargoes of beans today. That was a very minor sale, so I didn't move the needle at all. And realistically, soybean sales on the books for new crop are trading at a 24-year low for this time frame of the year. So we need some buyers to step into that bean market, or that market could still be in further trouble given the prices that we've already went to here.
From the Department of Agricultural.
From last week's report, in terms of that June 28th, there's a lot of questions that come into both of those reports in terms of the acres right now. First off, the side note they had in there was the percentage of corn that still needed to be planted and soybeans at that time frame. Now that's not atypical. They said 3%, 3.7% of the corn needed to get put in the ground, 14.8% of the corn needed to be put in. Now, you go look at the last handful of years, those are fairly average numbers. 22, we have 4.5% out and 17.9% out. So typically, we don't see much of a change from the acre side from the June numbers to the September numbers, even with those types of discrepancies still in there. So that's something we'll have to keep an eye on. I wasn't surprised we saw the jump in corn acres. I was hoping it wasn't going to happen, but I wasn't surprised by it. If we remember back to March, we had 6 million acres of principal crop ground that was not in that report. And some of that showed up here on that June 28th report, obviously adding that into the corn acre side. Cotton acres took a step up, and there's still some more acreage out there. Now, all the concerns about prevent plan, obviously the flooded acres, things like that, basically is not in the cards here until we get to September, where we start seeing that FSA data for prevent plan usually middle of August. Those numbers start working out, and then we get a little better idea where this crop is. But unfortunately, this market's probably going to go through a market cycle before those numbers come together.
How did the beans in the acreage report as well?
There again, we saw just a small tick up in soybean acres. Still a lot to be planted. Now some concerns are starting to show out there. We'll see where those numbers are going to get put into the report here as well. that comes out on Friday. One of the things we're watching now very closely, some talk out there that some of these areas that did get some flooding, that lost some of their production, got the insurance companies through, zeroed out that production. They're coming back and planting some beans now as fields have kind of dried out a little bit. So that's something we may have to watch, that we pick up some additional acreage on the end there. Plus, we're hearing talk that this wheat harvest has gone through quickly. If the moisture's there, we could see some double plant come into that situation, a second crop of beans in there as well. So right now, anything that's positive in the bean market in terms of additional acres is going to be a negative in the price side. Again, as I stated before, we're really concerned about the demand side, so we don't really need any more added to the supply side of the equation. But again, one big thing though for these grains, it's what really moves the needle now. We need the demand on the demand side of the market. Getting 1 million tons of corn or beans sold, that's a pile of bushels that move a lot more than if we have a half an acre or half a bushel per acre move on a yield projection.
What is going on with things in Mato Grosso, Brazil since December?
Well, Mato Grosso, their key kind of production state, we just continue to hear that things are better than most people anticipated. First off with that soybean crop, as well as now the corn harvest. So that's going to be a major thing that still weighs on these markets, and it still does now. Brazilian beans are now very, still a little bit more competitive than U.S. prices, but we're maybe seeing that starting to come to an end here. We'll see. It doesn't mean we're going to have a strong bean rally because Brazilian beans are softer. We still need someone to buy those beans and get that market moving. On the corn front, they seem to have a very good export program, are starting to get their export program going now with corn. Good production out of Mato Grosso seems to be there. Those yields came in very well. They picked up some timely rains. They're the strong area versus some of those outlying areas that are a little bit drier and going to see some yield losses. So Mato Grosso's had itself a very productive year. And unfortunately, when you have crops that do have some size to them, they have a little bit of a longer tail. And that's something that's going to be a limiting factor in our markets going forward.
What is the interest rate from the Federal Reserve with Jerome Powell for this afternoon?
Well, we're not going to see anything happen, I think, in terms of rates right now. Everything is pointing to a September rate cut. At least that's what the stock market is pointing in at this time frame. He still, in his most recent commentary, wants to see, where that inflation data wants to go, what's happening with the job market. So those things going forward will be kind of the drivers. But again, just the way the bonds are acting at this time frame in terms of the U.S. equity markets and the bond market, it's pointing to a 70% chance that we see a rate cut in September. That's one of the reasons we keep seeing the S&P 500 keep climbing to new record highs on a daily basis, is just trying to build that anticipation in. On the big scale, though, there's a couple things that do concern me. What's going on in housing right now with the higher interest rates? Is housing slowing down? What's going on with consumer debt? Credit card debt is at its highest level ever. There's a point here where the American consumer just realizes they're getting spread too thin. That's something that could come into play in the commodity markets, especially markets like cattle and hogs, where that retail demand is such a key piece to the pricing side of the equation. So those are things I'm watching going forward. Add in the instability with the potential election coming up here in November. Those things are also going to be something that could weigh on markets in general going forward. But right now, it looks like a potential rate cuts coming in September. Unfortunately, we've heard that before. We thought they were going to make moves in May and June, and obviously nothing here in July as well. But now the market's targeting that September window.
How is the bonds markets for right now in New York?
Again, bond values have been seeing the bonds go up, which is an inverse relationship to interest rates. As bonds increase in value, the interest rates go down. And again, that's the trend we're seeing right now, which is that they're anticipating some form of rate cut coming. And that's why we're starting to see the trend in the bond market that way.
John, could you explain to our listeners about the wheat markets for right now alongside taking under pressure?
Well, we got a couple different factors that are really weighing or acting on the wheat market at this time frame. First off, obviously, we had the strong rally earlier in the year here based off the potential issues in the Russian crop with dryness. That's what led us to those May, June highs. And then as the market got a little more comfortable with what was happening there, we saw the strong sell-off. Those factors are still out there. Something we may have to keep an eye on going forward. Is that Russian production really that poor or that good? There's still some question marks there. Russian wheat prices drive the global wheat price in terms of the marketplace. So that's still going to be the big overhanging balloon or blanket or whatever you want to call it in terms of this market. The other side, two factors that are really a big factor right now, U.S. harvest is ongoing. KC wheat or hard red winter wheat harvest is cruising along very nicely, well ahead of the 5-year pace. Last week, I believe we were around 40% done on the crop progress numbers. So there's hedge pressure coming into that KC market there. And then on the SRW or the Chicago wheat, as we call it, now we're starting to kick that harvest in. Expectations are for a strong harvest there as well. Just even looking at things locally, the wheat crop here, which is that SRW crop, fields look great. Thick, good coverage, big heads, just a good volume of wheat out there. And from talking to some producers, they're seeing some of those results. So obviously that's all hitting the market right now with hedge pressure. That comes after a lot of wheat probably moved off that rally. So the elevators are a little bit full right now. So that weaker cash market, weaker basis levels, going to make it hard for this wheat market to find some footing. But after we get through harvest here, keep an eye on what's going on the global scale. There may still be some opportunities out there. We've seen some wheat exports kind of pick up the last couple of weeks here. That's what this market's really kind of counting on, is to see more business come our way. But that's still going to be a little bit more down the road as we get further into the fall, maybe even into early winter months.
Do you have any information about shipping issues with Ukraine?
The Ukraine issues have kind of moved a little bit to the back burner in terms of this marketplace. It is what it is, is the way the market looks at it. The headlines don't seem to move the market at all anymore. For the most part, everybody thought we were having shipping issues, but wheat still and corn was still moving out of some of those Ukrainian ports. And you can just see that, back when things were rallying back in the, 2023, when the war was at its height in terms of the news cycle, we get those events. Something would happen, bombing in Odessa, hit the ports, et cetera, et cetera. We saw a reaction in the market, and then things would fade as the market's gone. So it's gotten to the point now it's really become old news, at least in terms of the wheat market. Obviously not, reflecting on the damage that's going on there in the humanitarian side of things, and those types of issues. But at least from the market's perspective right now, the Ukraine war has kind of moved a bit to the back burner and really doesn't drive this market unless we really would have something major happen that could change those flows. But at least at this time frame, Ukraine looks like they're getting some product out. Their biggest problem is getting things planted where the crop could be weather right now, which is still fairly dry in that region. Those are some things that may be more of a factor as we get down the road with the development of this crop for them.
How about the cattle markets for today's news for right now? Could you tell our audience about this?
Sure. Cattle market right now, a little bit concerning to me. One of the big factors that I've been watching, keeping this market supported, has been the retail values. We had a heck of a run into the 4th of July holiday window. Choice carcasses, $3.30 on the weight, on the price per pound there. We did see a break on things on Tuesday, down about $4 to $5, now trading around the 325 and change area going into the afternoon close today. With that kind of puts some scare into the cattle market. If those retail values aren't there, the money's not there in the cash prices. We are seeing some cash values coming in a little bit softer than last week, at least on early trade this week. So that's going to be a big trend. Realistically, in 2024 here, for the back half of it, or at least up to this point, we've seen consolidation trade. Look at long-term charts. We're building ourselves a bit of a wedge pattern. Does that pattern break out, or does that pattern slip to the downside? So with that happening, I'm a little cautious of the cattle market right now. I know the fundamentals are still very supportive, but at the same time, we're really starting to stay focused on where that money flow is. Also, if we did happen to see some rollover in the economy, in the equity markets, cattle market would probably fall right with it. So for producers right now that are in cattle here, take advantage of these good cash prices, get some cattle locked in, look at ownership on calls, or if you don't want to make those sales, make sure you got some floor underneath here, because some of these charts are pointing to a pretty significant break on the technical side if the market really wanted to fall.
Did you see the demand for cattle from last week?
Well, I'm looking at some of the longer term trends, and again, that demand for cattle comes down to those retail values. So things have been really good. I mean, 330, 325 even is still a good price range for beef at that time frame, and I still think there's some meat on the bone for the packers, again, the cash market there. But the trend in that's going to be the big key. Now, usually 4th of July is kind of the quote unquote unofficial end to the summer demand. Typically we see cattle markets kind of peak out here between now and the 1st of August, and maybe wherever we hit that point with that strength on the 5th of July after the holiday. So again, a little cautious right now. Some of the other sides I'm watching, export demand has been really good up until the month of May. Now we've started to see some things slide there. So maybe those heavier prices for beef as well as pork are starting to weigh in terms of that global export market. And if we see that dry up as well, that's just could back up some supplies. And again, makes things look a little bit nervous right now here in the cattle market, especially with the most recent move in prices here the last 3-4 days.
Do you have any final thoughts on the market for right now?
Again, on the grain side, we're staying cautious. The supply is not is still pointing negative. The demand is still really pointing negative. Producers, if you're behind the 8 ball on things, I keep telling them, let's just get a handle on some of these unpriced bushels right now, whether that's just owning some cheap puts to keep a floor under. I know we're probably protecting a loss in the market, but at least let's make sure we got that minimized. So that's where I'm at this time frame. There's a lot of uncertainty going forward in the next handful of months. So that definitely as a commodity market looks to trade here, something that makes me very, very anxious. We do still have some very elevated levels, especially in the cash and the cattle market side, that things got further downside in front of us. So make sure we're staying diligent here and making sure we got some protection in. Rather be wrong buying puts than continue to watch prices fall.
Thanks, John.
Thank you very much. Appreciate your time today.
This is John Heinberg from Total Farm Marketing for Back Roads of Illinois. We are going to see the commodity prices on Back Roads of Illinois. Corn futures finished down 8 to 9 cents. Soybean futures finished down 3 to 4 cents. Wheat futures finished down 3 to 2 cents. Now that we are going to talk about the livestock market for today on this afternoon, cattle finished down 3 to 4 cents. Feeder cattle finished down 4 to 6 cents. Lean hogs finished down 8 to 9 cents. Texas crude oil finished up 3 to 4 cents per barrel. Dow Jones finished up 3 points. This is your agricultural commodity markets update on Back Roads of Illinois. Thanks to Chris Torres from Farm Progress and John Heinberg. We're running out of time on Back Roads of Illinois. For Back Roads of Illinois, I am Cesar Delgado. Have a great day.